I welcome all of you to this session. And when it is Saturday, summer Saturday especially, and when the weather is nice, people are planning to go to the beaches and everywhere, taking the kids everywhere. So we are planning for our business. We are thinking about the business, and that really shows that we are not working in business. We are working for business. And we are committed to make our business better. So that's why we are here today. And I really appreciate, everybody here appreciate the work we do, the work accountants are doing for the clients. Because this is the business where the people call you guys, they trust you guys whenever they have financial issues, whenever they have financial concerns, they are insecure or something. You guys are the first person they call, and then they trust you to guide them in a better direction so their financial concerns are being solved. And the questions they are coming from them, they are all different kind of questions, because clients are well aware today. We call that today's, in the market, today's Canadian, I would say, they are informed clients, they are educated clients. So they have all sort of questions, and with that I can say that the financial planning that we are doing, with the time it's becoming more and more complex, really complex. And with those complexities which are coming through CRA rules, Government of Canada's changes, with the government changes and all, it's becoming complexer. So it is our, I won't say duty, but we have to be empower ourselves, we have to be educated, we have to keep ourselves updated so we can guide our clients better. Now, what in High Point Financial, what kind of questions do we get? How to reduce the taxes legally, how to protect their families and businesses, how to create retirement income that lasts, how to transfer the wealth to the next generation, how to safeguard their estate from unnecessary taxations, and how to build financial securities while managing all the risk. So these are the questions clients are asking. So it's not really about just filing the taxes, opening the business, setting up the business, securing the business name and all. Now the market is way beyond that. And at High Point Financial, what we think that no professional should solve these problems alone. We might have answer to one question, but our colleague, our friend, our partner in the community, they have the answer to other question. So we don't have to struggle alone. We don't have to go to chat GPT and type the question and get the answer how to do it. So when we are in this changing market, in AI changing market, nowadays client even go to chat GPT, ask the question what their medical problem is, find what medicines do they need, and then they go to doctor, can you prescribe me these medicines? That's the time it is. So we as accountants, as professionals, we are no different. They go, they ask the chat GPT about all sort of questions, and then they come to the professionals, and they don't ask for advice, they give advice. Can you do this for us? Well, they are not interested in what we know. So what we are doing, where is our expertise? Where is our qualification? So what we have done over the past years, it has been replaced by AI, but AI does not have all the answers. Real experience have the answers. But with the experience, updation is equally important. So that's why we believe that we are not alone. At High Point Financial, we have brought and we keep on bringing many different industries together at one place, whether it's an investment and insurance, whether it's a real estate mortgage, accountancy, legal, estate planning, and whatnot. So that when we don't have answer, we have someone to ask, we can work together, we can help the clients at the same time grow our business. So That's the vision. And today's session, which is designed especially for the professionals, for the accountants like you. So, in this session, there's a possibility that you know everything that we will be presenting, and there's a possibility that you will see something new. Today's session might open new doors to the new conversation with the clients. Maybe the clients have asked a question and you have the answer now. This session can help you uncover the planning strategies that we unintentionally were missing while planning for the business clients or personal clients. So, as I said, it's not really about filing taxes now, it's a much more than that. It is the clients are coming from all over the communities, and as we say, Canada is not made for the working people, Canada is made for the business people, and we are getting business clients and we are responsible to solve those business equations for them. So that's why the session will be an hour and a half. I would suggest you to keep your eyes, mind open, take notes. We will have question and answer round at the end, so you can write down the questions. If you need paper pen, we have them. And during the QA session, we will have a chat, a long chat. After that, even if your questions are not answered or if you need a descriptive discussion, we have all the rooms here and you can sit with Philip, Rakesh, myself, so maybe or anybody else. We can sit and talk, and if it doesn't work, we can again book one meeting and then we will work again. And today's session is just about education and information. And when we say education and information, that means you guys know better. You guys are compliant than anybody. That CRA rules, Government of Canada rules keep changing, especially with Trump sitting at the highest position in the US. Everything is unpredictable. The rules can change tomorrow. So the information we are giving today, it is based on today's current market. This might not be applicable after a year or two, maybe after a month, who knows. So recording, you better you can take screenshots. If you don't record, that will be good. We have the session recorded with disclaimer on, it will be on YouTube, and it will be, the link will be emailed to you if you need. So yes, keep your eyes open, turn off your phones, and let's dive into what we are learning today. So today's presentation will be given by our compliance officer, our financial advisor, estate planner. He has so many degrees in his hand, and he is an expert who has over 3 decades of experience. He has written 4 books on financials, and he is not only financial expert. He has worked with hundreds of advisors and clients who needed financial advice. And the good thing that we like about him is, like today's financial equations, which are very complex, he's expert in simplifying those and presenting those simplified solutions to the clients and agents as well. So he's a trainer, he's a coach, he's a compliance officer of High Point Financial, and he wears many hats at one time. And he will be presenting which he will be bringing over 3 decades of experience to you. He will be talking about current market outlook, where in the past many things have changed, and there will be a lot more information. So stay tuned, keep your minds and eyes open, do not sleep. If you sleep, you can ask for water. So yeah, let's put a hand together and bring our presenter, Mr. Philip J. Brandt, to the stage.
You know, I've been working with accountants for years, and it was interesting. One of the accountants here today came to me early on because she said to me, I'm here because I want to learn. And as Rita did mention, I'm a believer in lifelong learning because education is the only thing nobody can ever take away from you. So, for those of you who are here today, please open up your minds. As Rita said, we are going to cover a lot of topics today. Because one of the things she said to me was, are you going to be talking about individual taxes or business taxes? Are you going to be talking about how we properly structure a business? Are you going to be talking about finance? Are you going to be talking about accounting and taxing? And I said, yes, we're going to cover all of those things today. So please, there will be time for Q&A at the end. I strongly encourage you to take some notes. If you have a question, please wait to the end because oftentimes that these questions will be addressed throughout the presentation. And as Rita said, please turn your phones off, turn them on silent because we don't want anybody else to be disturbed. We don't want to be scrolling. And the reason why we do not want you to record today is we are very, very, very heavily compliant here. Because if we give you information today and things change tomorrow, and one of the topics we are talking about right now is in discussions currently with CRA under the old budget. So if things do change and you take under the old rules, we're fiduciary. We're legally bound. So this is the reason why we ask you to turn your phones on today. So again, thank you. A little bit about myself. As Rita said, yes, I've written 4 books. Yes, I have lots of education and designations. But really, who am I? I'm a lot like many of you. You know, I'm in the sandwich generation. My parents are still alive. I have 2 children, wonderful children. My daughter is a nurse. My son is a master electrician. You may have seen one of the my granddaughters running around here today. We are very, very family oriented, very similar to many of you. Can you open that house too? Yeah, thank you very much. So, very much like you, but I'm also a learner like you as well. I'm always learning. I hear all the time, when are you planning on retiring? Why would I ever retire? This is so much fun to do and really learn. So earlier on in my career, unfortunately, I had a manager who really didn't know much. And I looked for somebody who now looks like me, somebody gray hair. His name was John. I said, John, how long have you been in the business? And he'd been in the business about 30 years. I said, can I take you out for lunch? He said, I'll do you one better. I will take you out for lunch on one condition. There will come a time and point in your career that I want you to give back. And my time to give back is now. And this is the reason why I do work with High Point. I am the compliance officer, and we really, my mandate is to give back to everybody. We do these workshops on a regular basis, not just for accountants. Usually it's for the Canadian consumers. Last month we did about estate planning. The month before that, we did tax reduction strategies. The month before that, we did RSP alternatives. We're always, 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 because we believe the more educated Canadian consumers are, the better for us, the better for you. So, what are we going to cover today? First thing is, we're going to talk about deepening client relationships. You already have clients, and they're coming to you for advice. If you don't have somebody who's professional to turn to help you out, unfortunately, they're going to go somewhere else. That's the reason, number one, why we're doing this session today. We want you to help deepen your client relationships. Also, expand your advisory services. We're going to share with you some tips and tricks today on how you can actually grow, expand your business. We're going to talk about corporate as well as personal tax optimizations. We are one of the very few companies out there that really understand small businesses, work with small businesses. We are going to give you information today that you can walk away and talk to your small business owners and say, look, this is the type of services you do need. Retirement strategies. It's one of the things we always talk about here. Business owners are really the lifeblood of Canada. Unfortunately, they're working hard. They turn to you and say, how can I get more money? So we are going to be talking about strategies there. Intergenerational wealth transfer. I'm going to show a slide today that you may go, holy cow, I had no idea. You know what? I, as an accountant, I have a huge responsibility. So we're going to cover that. And we do here at High Point as well. An economic outlook. You know what? After today, you may say, you know what? Thank you, High Point. Thank you for the information and never see us again. We understand that. So I'm going to give you information today to help you personally put more money in your pocket. And that is our economic outlook. So we add a lot of value added to you. There's a lot of things we're going to be sharing with you to add that value. So let's first start. Let's talk about compliance. As you heard, I am the compliance officer here today. So everything that we do has been research, research, research. Everything we talk about is CRA. So some of you have other people that you work with who are in our industry: financial advisors, financial planners, insurance agents, bankers, mortgage brokers. We get that. Are they doing everything compliant? Because we here at High Point do. And all of our people are properly prepared to help you and your clients out because of compliance. We do regular compliance checks on all of our people to make sure that they're not running in any trouble. We luckily enough have never had a lawsuit here at High Point. Again, will talk today about people in your industry as accountants who have had legal issues with FISRA, have had legal issues with CPA Ontario. We will talk about that. We don't touch that type of stuff. Everything we do is legally sound and compliant. So let's start. We're going to talk at the beginning your individual clients. How can you help them out? Because some of you have said to me, you know what, Philip, really have a large individual client base. What can you do for us? Every presentation that we do, and we've been doing these for a long time, we always start with something like this. It's called the financial pyramid. Interestingly enough, everybody in our industry has to pass a course, and this is in that course. Doesn't matter if it's, say, the LLQP, the IFIC, as you've heard, I've taken a lot of different courses, the CSC, they all talk about the financial pyramid. And why this is important. There's certain aspects of this financial pyramid that we start with. This goes back to your clients, and we'll really foreshadow what we're going to talk about. Wills and power of attorney. First question we always ask the client: do you have your wills and power of attorney done? And you know what we hear all the time? My last insurance agent or broker or planner or banker never asked me that. Why are you asking me that? And I always say, well, because legally I have to. I have to make sure that you're properly set up, properly prepared. So we ask about wills and power of attorney. And I know I work with a lot of accountants. You do it too. Because if they don't have their wills and power of attorney properly set up, they run into major tax problems. And again, we talk about beneficiaries and everything else there. And then everything else moves up from there. So when we hear all the time, when we do these workshops, well, aren't we here just to talk about insurance? No, 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 no. That's a little thing what we do. Just a little thing. Yeah, obviously we have insurance, but look, all this other stuff, RSBs, TFSAs, LTC, we deal with everything. Why? We are solution based, not product based. What I mean by that is we do not sell products. We work with our clients like you do. Give them the solutions. If they choose to take your solutions, great. If they don't, then there's obviously things for them to do. But again, everything we do is solution based. So I want to start what we on the individual side, and you probably hear this, and maybe this is some of the stuff you already explained to your clients. There's a lot of myths out there about RRSPs. So let's go over them. The first myth is there's no point in investing in an RSP since you pay all the savings back in taxes when you retire. That may be true. But you know what? If it is true, people aren't planning properly. We have tax reduction strategies that we work with our clients to make sure this is a complete myth. Second, when I reach 71, all my assets have to be sold off. That's not true. That's not true at all. And again, as an accountant, you're probably aware of that, but more and more Canadians are not aware of that. You can only withdraw funds from an RSP after you reach retirement age. Again, not true. You can withdraw your RSPs anytime. You have to pay taxes, and that's why they come to you. But again, RSPs can withdraw at any time. It's better to invest into a TFSA than an RSP. Maybe, not always. And I'll give you an example in a second. Because one of the biggest myths I hear all the time is, oh, I'm too young for an RSP, or I'm too old for an RSP. Well, you go onto TikTok and you'll hear time and time and time again, you're 25, there's no way you should have an RSP. Biggest myth out there. Why? Age has nothing to do with your RSPs. You're accountants, you know this. What happens with your RSPs? It's taxes and what their income is. A prime example is my son. My son is a master electrician. Last year, he made over $100,000. He needs an RSP. Why? You do his taxes. Where else can he get a tax return or an increase of his return in 40, 45, 50%? Nowhere else. Nowhere else. The biggest benefit for him is to have an RSP, even though he's young. Now, what's the strategy behind it? There's two. The first strategy is we take his RSP, his refund, we put into his TFSA because yes, he needs a TFSA. The second strategy, I'm going to wait in a couple minutes. I'll share with you one of the best strategies out there that we've already put proper planning in place. So we have tax reduction strategies for him because he doesn't want to fall in the first myth. So, can you have too much money in your RSPs? Yes, you can. We believe this. Instead of a cash flow issue in retirement, you have a tax issue, and you see it with your clients. But here's what's happening with your clients. They have too much money in their RSPs. They're still working. They need that deduction. What alternatives do they have? We'll share some with you today. Share some with them today. So, what are some RSP alternatives? First, and you're going to hear this all the time from everybody in our industry, life insurance. Sure, that's one segment. Obviously, we do a lot of life insurance, but again, it has to be properly done, properly managed. We hear all the time, and I've been in this a long time. I sit down with clients, and they'll say to me, "Yeah, I got life insurance. Great. How much do you have?" "Well, I have 500,000. Fantastic. Why do you have $500,000 life insurance?" "I don't know. That's what the guy sold me." "So you have no idea why you have that amount of life insurance?" "No." Again, we do not sell products here. We sell solutions. Maybe 500,000 is a proper amount. Maybe it's not. We do a full analysis to figure out how much they need. But I want to share with you a tip that you can take back today to help your clients out when it comes to life insurance. And again, this is CRA mandated. So, have you ever heard of single pay life insurance policy? Well, single pay is pretty simple. You pay for the life insurance policy one time. That's it. That's why they call it single premium. So you don't have monthly expenses. It's a one-time payment. So we run into clients on a regular basis. They'll say, "You know what? I've maxed out my RSPs. I've maxed out my TFSAs, but I need other tax strategies. And I am an individual. I'm not a small business owner. Are there any other tax benefits I can do?" I'll share with you one. Okay. So a single premium is very simple. When you make your single premium payment, it instantly activates your life insurance policy, which remains in force for the rest of the life. One time payment. A portion of the premium payment also goes in the cash value component that goes over time and lets you take out policy loans and make withdrawals during lifetime without affecting your death benefit. That's in the contract. But we take things one step further. So I'll give you an example. Say you have a 50-year-old male, good health. And this is just one example. And he has $100,000 in non-registered accounts right now. And you've already advised him, you know what? You're paying interest on it. Maybe you're paying dividends on it. Maybe this is going to run into a capital gain issue for you. And he says, "What can I do?" Well, why don't we take that $100,000, buy a life insurance policy, one-time payment? Well, he immediately had to triple his revenue. It goes from 100,000 to 300,000 as the face value. And again, it's why? It's because he's still relatively young, and he still has, good health. So everybody is a little different. So we're just going with the scenario. Why would you do that? Well, we would leverage that life insurance policy. You have now a collateral piece, no different than your house. You take that collateral piece into the bank, and the banks we work with, because it's a collateral piece, will give you loans at prime or prime minus a half. So why is this important? So leveraging a life insurance policy can transform your coverage into a dynamic financial strategy. Provides liquidity because we've got to put the money back in. He needs that money down the road. Tax efficiencies and estate planning advantages. Done properly, it allows you to protect your family while also making the money work harder. So the interest on the loan is a tax deduction. only if you do it properly. Your accountants, only if you do it properly. Well, what does Revenue Canada tell us? Well, in August of 2024, CRA made a ruling, and this is what their ruling says. CRA updated its folio on interest deductibility and generally confirmed its existing entrepreneurial and positions. This is what they said. To achieve interest deductions, the borrowed funds cannot be used to pay the premium of a life insurance policy. Therefore, no double back policy. And what this means, we've heard for time and time and time again, we get calls from accountants and said their advisor has said to us, you know what, they're going to take the life insurance policy, borrow against and buy another life insurance policy. So all of a sudden, instead of having 300, they have 600. Do it time and time and time again. Makes sense. Can they deduct the interest? Revenue Canada says no, they can't. Now there's things, and you're gonna see in a couple minutes, you can deduct that interest if you follow Revenue Canada's guidelines. So if you've already had a client who's done a back-to-back policy and you've deducted the interest since August of 2024, just stop. Not only you, but more importantly, your clients will run into trouble. So make sure that, again, we're talking compliance here. So we're now going to switch gears. We're going to talk about an RRSP freeze. You may have heard of it. You may not have heard of it. Well, what's an RRSP freeze? First of all, it's not an RRSP meltdown. We hear from accountants and, more importantly, advisors who do not understand the ramifications of an RRSP freeze, and they try to do an RRSP meltdown. What an RRSP meltdown is you borrow money and you liquidate your RRSPs. That doesn't make sense. Because as you all know, when they retire, they need some retirement income. They want those pension adjustments. Pension deductions. They want to make sure that they have certain incomes to qualify for all their benefits. If you roll out all their money, first of all, they're not going to have any income at retirement. And more importantly, it's way, way, way too aggressive. So we do what's called an RSP freeze. An RSP freeze is not a set and forget it strategy. You always have to be monitoring it and looking at it. So what is this? So an RSP freeze, before I go on the list, is very simple. And I set this up with my son. Again, he hasn't started yet. We've already planned for it. So when my son's about 45, what we're going to do, at that time, we figured he's going to have about $800,000 in his RSPs. That's a lot of money. So what we're going to do, we're going to go borrow $800,000 against it in non-registered accounts. The money coming out of the RSP is going to fund the RSP loan, or the non-registered loan, and those two offset. That's an RSP freeze. Making sure that the money that is in the RSPs isn't going to grow too much. It might be a little bit, but it's not going to grow too much, and you're not going to withdraw all the money either. So interest payments from an investment loan is tax deductible. It will cancel out the tax income created by the RSP withdrawal. So we're very clear here. We're very compliant. Yes, you pay taxes on the RSP coming out. It's not a situation that RSPs are you can get your money out without incurring tax. You have to pay the tax. But as you know, as accountants, you get an offsetting tax deduction. So it does result into a zero net. Now, let's say what Revenue Canada tells us. Again, we have to be very compliant because more and more people we're running into situations, they don't understand the tax rules and they're doing this improperly. You must use the loan to purchase dividend paying stocks or guaranteed investment funds in order to create a tax deductibility for the interest paid. You know that. So how many of your people have done this, or a version of this, and come to you, hey, I want to deduct this on line 221. You're going, you can't do that. Yes, I can. I was told I can. No, you can't. Again, as of August of 2024, you're not allowed to do it unless it is based on dividend or guaranteed investment. Because what's going to happen, they're going to come to you one day and they're going to say, you know what? My knees are shot. I can't work in construction anymore, but I have this great business. Help me sell it. Do you know how much their business is worth? Because they're going to say to you, you know what? I've done the calculation in my head. I talked to my friends. I can sell this construction business for $1 million. Is that a true and accurate price? Do you know that? We here at High Point, we work with a company called Bench Capital. They're a merger and acquisition company. They will come into your clients and tell them at no cost exactly how much their business is worth. Here's the interesting thing that they do and why they work with us. They come in and say, you know what? Today your business is worth $500,000. But if you do this and this and this and this and this, in 5 years, it's going to be worth $1 million. That's what they do. So what do they need? They need our services. They need to put assets in their business usually. They need to set up their pension plans, their employee benefit plans. They need to set up, their key person insurance. They need to set all that up, which we do. But they're here to help you out as well. Again, most small business owners don't know that. So let's go back. Okay, now you got the businesses going. Number one concern for the business owners is I need more money. How can you as an accountant put more money in my pocket and pay less taxes? I'm going to share some tips with you today. They want to deal with the capital gains taxes. You're well familiar with under the new tax regulations is $1.39 million capital gains exemptions. We're going to cover that. How to properly set that up. And of course, they want the succession plan, which we talked about earlier. We're here. We understand the small businesses. We work with them all the time. We're willing to work with you to make sure that is done. So when I speak to the accountants, this is what I hear all the time. And I agree with you. This is something that we have done here at High Point for a long time. You need a holding company. Okay. We set up a holding company. We can do that. Are you aware that under the last budget, Revenue Canada is talking about how the cash goes into a holding company may be taxable now instead of tax deduction? We're waiting for the ruling. Again, we're up on top of it. So right now, holding companies make a lot of sense. So if you're unfamiliar with a holding company, why do people use it? Asset protection, tax deferral. Again, the $1.39 million capital gains exemption, exit strategies, and succession plans. As accountants, you probably hear all the time, I want to sell my business. Okay, great. Do you want to sell your business or do you want to sell the corporation? Because they are two different things. Again, most accountants know that. Most individuals in our industry have no clue about that. So when does a holdco make sense? Corporations consistently retain significant profit. Your client really doesn't need all the profits. They've grown the business. They don't need it anymore. Limited liability and setting the business up for sale. The number one reason why a lot of small business owners come to us, work with us, is because they're ready to set their business structure up properly for the sale of their business. And everybody seems to be confused about holdco. They're very simple. The shares you own of the holding company are the assets held. The share of the holdco owns the operating company, and it's the business that's done. It's very simple. It's a very simple concept. We have lawyers right over there. They're the ones that actually we do it. You really probably have no idea who High Point is and what we actually do. I'll cover that in a couple minutes. We have all those experts on staff to help you out. So I'm going to give you an example. I got called 3 weeks ago from one of our agents who's relatively new in this business. And she said, I was a small business owner, and the accountant started talking to me, and I had no idea. Would you come? Of course I'll come. I'll come and I'll sit down. And this is what the accountant said to me. First thing the accountant said to me is, you know what? My client is a small business owner. He's currently taking in $300,000 of income, and he has $100,000 with retained earnings. Very concerned about retained earnings. The client said to me, I need a holdco. I said, yeah, you do, but you need other services as well. But this is what people in our industry did. We were the third company to come in. First company was RBC. They said, you need a leveraged loan. Yeah, it probably does. But that doesn't solve this $100,000 retained earning. It doesn't solve it. Sun Life came in and said, you need a UL policy. Well, it does. But that still doesn't solve this problem. We came in and we do a full analysis. By the way, we do a full analysis for all our individual and our corporate clients. before we make decisions. And what did we determine? We did a complete analysis and determined the best option is an IPP or individual pension plan. You know, we've been working with a company called Integris for a long time. They're great individuals. And the most recent stat came out and it said, did you know 98% of all small business owners need and qualify for an IPP, yet only 2% of them have it? 98% qualify and need it. Accountants, you need this. You should be telling your clients this is the best tax structure out there. I'll explain why in a minute. Why don't they have it? I'll tell you why. Number of reasons. One, most people in our industry have no idea what an IPP is. They've done survey after survey. Most people in our industry have no idea. Those who do know a little bit about it never move forward because they can be a little complex. But again, the number three reason is most people in our industry don't even know anything about small business owners, how to work with. We here at High Point, we're very, very, very different. We work with small business owners. We have small business experts on staff to help our people out because we work a lot with individual pension plans. So what is an individual pension plan? If you're unfamiliar, I call it a supercharged RSP. Well, an IPP is a wealth accumulation and tax saving solution specifically designed for business owners or incorporated professionals like you, accountants, real estate agents, dentists, doctors, lawyers. Just so you know, you'll see how we may work together in the future. Our next workshop is for dentists and doctors because they need this. This is exactly what they need. Nobody's talking to them about it. So, an IPP allows you to accumulate significantly more retirement savings and pay less tax than most Canadians. Okay, it offers incorporated business professionals the most tax effective way of savings for the futures. So, you may have also see here C suite executives. So, business owners who don't qualify for this but are key executives, we have something that's very similar to an IPP called an RCA. Looks very similar. Okay, let me keep moving. Here at High Point, we design and implement pension strategies tailored to the individual needs and maintains the plan's compliant status over its lifetime because it has to be compliant year after year after year. Every single year, we have to notify Revenue Canada of all the stuff. So this is why we want to partner with you. We want you as accountants to say, hey, you know, we're going to set this up and we are going to be in business a very long time because our CRA needs us working together. So, first of all, if you're unfamiliar with IPPs, first of all, you're allowed larger contribution room. I did a small business workshop 2 months back, and the first question was, well, how much money can I put into my IPP? Makes a lot of sense. And here's my response. I don't know. Here's why. We know with as RSPs, it's very simple. 18% of your income to a max, and you can go back and you can look on CRA. IPPs don't work that way. IPPs work as based on your age and your income. So we actually have to take the information, send it to our actuarials, and they will tell your clients how much money they can put in. Then, to be compliant, we send that off to Revenue Canada. Revenue Canada will take 2 months to say, yes, this is compliant. You've done everything right. We put a stamp on it, and then we can start funding it. So if you have a client that you say, you know what, they need an IPP, now's the time to get started because unless we start today, we're not going to have it done by the end of the year. You may also have clients that will say, you know what, this makes sense, but I need to think about it. Great. It's going to take us minimum 2 months to think about stuff. We'll gather the information. We'll do the actuarial stuff. We'll send it to CRA. If you say you don't want it, that's fine. But we have to get the process started. Tax savings on management fees. You've probably seen the TV commercials or heard the commercials on the radio. You know what? You need an ETF. Why? You're paying less taxes. You're not have the highest management and expense ratio. An IPP, you get right all those off. As Warren Buffett said, ETFs is probably one of the worst long-term investments out there. There's a lot better. But now, if you're a business owner, you can write those expenses off. This is why pensions always perform higher. Get it right on the step up. Number one reason why your client should have an IPP: no tax consequences at the time of death. As you know, as accountants, you have a client and they and their spouse pass away with RSPs. Let's just say $500,000. Their children are over the age of 25, who are probably the beneficiaries. We know that $500,000 comes in income. You can figure out the taxes in your head. That's a lot of money. Back in October, we did an estate planning session. And right that week we did it, there was a CDC article came out and it was on the CBC News. This lady was begging the government of Canada. My parents scrimped and saved all their life, and we have a $633,000 tax bill. It's not fair. Government of Canada, do something about it. Well, they have. Given people like us. We know how to handle that. Given people like you. If they had proper accounts, proper advisors, proper people to help them out, there wouldn't have been a tax liability. But going back to IPPs, this is pure, brilliant. No tax consequences. You can leave a legacy. This is why my family inside my business has an IPP, to create a legacy. My granddaughter doesn't know it, but this is all going to her and her children. We've created this legacy. So, this could be very risky. What kind of returns am I going to get? Well, according to Revenue Canada, if it does less than 7.5%, you get special payments. So it has to do at least 7.5%. Not bad. Again, oftentimes better, but assets pass from generation to generation without triggering a deemed disposition. I wanted to hit that twice. No tax consequences. Asset protection for predators. I'm shocked how many Canadians don't realize their RSPs are not predator proof. And you've probably seen it in your practices. Client comes to you, they had to liquidate their RSPs because the creditors were after them. And all of a sudden they have a huge tax bill, which caused even a bigger problem. IPPs, don't worry about it. Flexible retirement options. They don't have to pull money out at 71. Most small business owners I know, you're gonna work well after that. You have all kinds of different options. There's so many to list. I'm not going to talk about it here. Multiple tax deductions for MERs, administrative fees. Everything is tax deductible in an IPP. Okay. How many of your clients come to you about offshore banking? We deal with it. Again, we deal with it legally. Because you have people. I'll give you an example. I met with a client in my office. He came from Pakistan a number of years ago. And he scrimped and saved, working like most immigrants do. And he bought a Dollarama. Then he bought a second Dollarama, bought a third Dollarama. And he created all his assets. And then what did he do? You know what? He decided it was time for him to retire. He liquidated everything. He had this pot of money. He had 2 children, bought each a house. And he shipped back to Pakistan about $1 million. Now it's worth $600,000 because of taxes. He didn't understand how to set it up properly. We here at High Point, we know how to do things properly. If he would have came to us years ago when all this happened, we would have showed him ways for him to get the money out of the country without worrying about taxes. So how do we do this? So how is officer? Well, let's start with benefits. First of all, asset protection, access to international investments, privacy and confidential, and tax efficiencies. So mistakes of offshore accounts, not opening up the proper account. The number one mistake we hear from Canadians: I'm an individual, I want to put my money offshore. No, you can't. You have to be a small business owner. You have to be a business owner, and we'll teach and train you how to do it. I'm not going to get into the complex of actually how we actually do it. I'll go over a little bit of it, but we sit here and we do it properly. Knowing professional advice when the structure is complex. It is complex. You need to work with people who understand it. What we do is we work with people. And I'll share with you who we work with. Choosing the wrong jurisdiction. I'm going to talk about different jurisdictions today. Talk to you what's worked good and what's bad. legal and tax compliant risk. If it is not set up properly, clients can run into issues. So we make sure it's done properly. So let's talk about the jurisdiction. We're talking about Gift City in India, which some of you may have heard about. Switzerland, Singapore, Cayman Islands, Turks and Caicos, and Nevis and St. Kitts. So let's start with one I hear all the time is Gift City. Here's what Revenue Canada tells us. If you are a resident of Canada, CRA still taxes you. Therefore, income from Gift City investments is still taxable income. Gains, dividends, and interest must be reported. Gift City does not override Canadian tax rules. We are fiduciary no different than you are. We know when you fill out your client's taxes, you're having a discussion with them. And they may say to you, you know what? Here's my Canadian stuff. You do know I have some money in Gift City right now. And they tell you this. By law, you have to report that. Again, we're very compliant here. We want you to understand what the tax situations are. Again, maybe you are already, that's okay. You have to make sure that everything you do is compliant because I'm going to share with you people who are not. So let's talk about Switzerland. Because we hear all the time, you need a Swiss account. Okay, Switzerland's not a bad country. First of all, it takes $1 million of money to open up an account. So maybe some of your clients do qualify. Opening up an IBC in Switzerland takes a lot of money to actually get that account opened up. Highest fees and maintenance costs. But here's the thing about Switzerland. Banks in Switzerland now report accounting details to tax authorities in most countries. Now they go for Canada. But how many of you have clients in the US? Yeah. So they report in Canada and the US, and you do their taxes. If you do their taxes and they have an account in Switzerland, you have to report that income. Interesting. Now I'm not going to go over Switzerland or Singapore because Singapore, isn't bad, but it's way over there. It's a little higher. Turks and Caicos used to be the one we used all the time. But here's the issue with Turks and Caicos. They're now running into some geopolitical issues, so we really don't work with Turks and Caicos. So let's talk about Nevis and St. Kitts. Nevis and St. Kitts is in the Caribbean. They have strong asset protection framework, no taxation on offshore structures, privacy and corporate ownership, flexible and fast company formation, political stability, and a small offshore jurisdiction. The company we use most frequently in Nevis and St. Kitts is Hamilton Bank. And I oftentimes, well, why don't you use RBC? Why don't you use Scotia McLeod? Because they are down there as well. And the reason is because you want that separation. If you want to you deal with RBC down there, you can. But we like Hamilton Bank. Why do we like Hamilton Bank? Well, they're in Nevis and St. Kitts, but they're in a lot of other jurisdictions as well. So if something happens like it did in Turks and Caicos, that there's geopolitical risk, we can move that money over into Switzerland or Singapore or Cayman Islands. They have banking institutions all over there. And why I like Nevis and St. Kitts, very low barrier of entry. No, now I can go through this. So let's go over it. Offshore setup's pretty simple. Incorporate an IBC through a registered agent. So we have to have contacts down there, which we do to make sure that it's done properly. Submit necessary KYCs from all the directors. Open corporate bank accounts and investment accounts. Pass compliance review. This is the big one. There can be no money laundering. We do not work with clients who come in with, suitcases of cash. We have to be very compliant. Now, how do we do things? Well, here's how it typically looks. We actually take one step forward. You have your client, who's usually your corporation, owns the IBC. The IBC owns the bank and investment account. Client controls the IBC. It's a legal ownership layer, not a loophole. One of the things that we do to take one big step further, usually we put another IBC in here. So Revenue Canada ever asks, well, you have offshore money in an IBC, what's the value of it? Well, the initial IBC is worth $1. The second IBC owns all the money. So there's legal ways for us to do that, legal way for you to report it. And again, we make sure that we're following the compliance regulations. But it's all about privacy. You need to protect your businesses. We need to protect ours. Your clients want protection there. So we work with privacy. We're there to work with you and have privacy on the offshore world, much or as little as you want. But your clients need this. We're there to help and support them, show them the proper ways. Again, you're the experts. We're going to set it up. They may decide that, you know what, this isn't for us. We get that. We're here to give them that information. We work with people down in the East and St. Kitts, and we're there to set all that up. So let's go over a business client summary. I really scratched the surface. As you know, as accountants, there's a lot of different avenues and vehicles out there. We offer all those vehicles for you. Again, we are a complete independent brokerage firm. We offer everything. More importantly, I'm hoping that you've learned so far today that we have experts on the staff to help you and your clients out. Because you have to protect yourselves, your clients have to protect themselves as well. So, who are we? Well, we're the only company in Canada that is an independent financial consortium. So, what does this mean? I've been talking about our investment in our insurance side, but underneath our umbrella, we have a real estate department. You may have met Rakesh when he came in. He's the head of our real estate department. We have a mortgage division. Sumit at the back runs our mortgage division. Accounting. We have our one main account here is already, that's Nitish. We have legal, which is two doors down. Education and immigration. Underneath our umbrella, we know that Canadians want a one-stop shop. We're here to help and support all of them. So you may have clients new to Canada and say, you know what? I'm relying on you for everything. I want to start saving for my first house. I want to make sure my kids go to a good school. I want to now that I'm established. I want to make sure my business is properly set up, properly requirements, buy, sell agreements. Everything. You're the key person that they go to. Do you have people to help you out? Oftentimes, accountants sort of do. Some of them have different people all over versus one person to deal with. Some of you, and I know I've been dealing with accounts all the time. No, my clients, they go elsewhere. Problem with that strategy is they will go elsewhere and you'll start losing business. So you should have connections. That's what I want is. So we got all kinds of partners. We already have accounting partners, so you can partner with us. We're going to share why that's important, but just think of it. You know, we have clients that are looking for accounts, mortgages, real estate, legal, education, immigration. We also have paralegal services. We put in here some of our financial companies. We deal with them all. But as I mentioned earlier, we're the only company and we pride ourselves working with Integris. They're the ones that deal with pensions. They're the ones that really administer and make sure the information is correct. That's what we do. They don't fund it. We actually use IA, Assumption, Beneva to run our IPPs. But you know what? They're the ones that give us the strategy and tax structure. That's who we deal with. So at High Point, you have an opportunity here today, if you choose to, that you say, you know what? I want to partner with you. You don't have to, but if you do decide to partner with us, you saw all the different divisions. If you have clients and you refer those clients into us and say, you know what? I have a couple real estate clients. High Point, you seem like you're a good company, reputable, strong compliance. I have a couple real. Do you have anybody that can do real estate? Yeah, we do. You refer a couple pieces of business in, you get paid to do it. Again, I'm a compliance officer. First thing I did when we started here at High Point, we set up contracts with all of our different companies. We know other companies out there. And oftentimes, what other companies do, they'll say, you know, you're an accountant for a business to me. I'll give you some stuff. But do they have set contract? We have set contracts with all of our agents. So all of our divisions, we pay our agents 20%. So we have our mortgage division, our accounting division, wills, power of attorney. This is one that we always get a lot of business with small with accounts because we find out that a small business owner doesn't even have their will and power of attorney done. They don't have the buy sell agreement. Their corporate structures done incorrectly. So our legal firm does a lot of work there. Education, immigration, paralegal. So just refer them a couple pieces of business to us. You can add your bottom line of $43,000. You don't have to, but it will add to your bottom line. And I'll tell you in a couple minutes what we are looking for. But why should you deal with us? Well, we have experts at your disposal. We want to work with you. We are expanding our accounting services. We want to work with you. The question is, do you want to work with somebody like us? We're a professional organization. I'm hoping when you leave today, you realize that here at High Point, we're very professional. We're not one of these people that come in and say, you know what, I'm going to sell all your clients all this, but no, 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 no. We offer solutions, products secondary, full compliance, client focused. Because the number one concern you have as an accountant is your clients. You want to make sure that they're treated like gold. Solution selling, not product selling. Multiple vehicles for your clientele. We offer everything. We don't just do insurance. We don't just do RSPs. We do everything. We're a one-stop shop. Again, mortgages, real estate, education. We deal with everything. High Point difference. You walk away today. The number one difference you'll learn about us. Very compliant. That leads to our credibility. That leads to the professionalism that each and every one of us have. So let's talk about legal from your side. FISRA, who regulates us in the industry, this is one of the common enforcement patterns with you as accountants. Number one, an accountant or tax preparer bookkeeper begins by helping your clients out with insurance investments. Commissions are routed through a licensed agent. The unlicensed agent person remains the actual advisor. FISRA treats it as an unauthorized insurance activity, fronting, or an illegal commission sharing. I don't need to see a show of hands, but how many people here have had an insurance agent say, you know what, your clients need it. I will sell the products. I'll give you 50% of the split. They will lose their license. You'll lose your license. You'll get sued. You're legally not allowed to do that. Let's talk about your regulatory board, CPA Ontario. Relevant CPA Ontario rules commonly used in crossover misconduct cases. Rule 2001, maintaining the professional reputation. Rule 202, integrity and due care. 208, conflicts of interest. 217, legal or unauthorized activities. This is what your regulatory board's telling you. So we now have both regulatory boards we're talking about. Here are some common examples. This person, Dan Tiffin, $50,000 fine by FISRA and was banned as an accountant under Rule 217. Michael Studart, $30,000 FISRA fine and his accounting license was suspended and banned. Andy Forbia, $25,000 FISRA fine and under Rule 217 banned. Yet Borges, $65,000 fine and accounting license pulled and banned. So, do you want to deal with a reputable company or not reputable company and put your licenses at risk? One of the things I talk with all of our brand new agents here and all of our agents who come to us from other companies, we are compliant. Don't cross that line. Okay, so why should you partner with us? Well, clients of yours need more than just tax filing services. We're here to help them out. Cross referrals grows your business. You saw if you want to work with us, you get the cross referrals. You can make some money. Higher client retention, because if they are not coming to you, they're going to go to somebody else and you're going to lose those clients. Competitive advantage. You can now advertise on your website, your LinkedIn, everything else. You know what? We work with other companies to make sure our clients have all the proper needs set. But why today? Why should you work with us today? Well, one of the big things is if you have small business owners and you're going, yeah, in your mind, you're counting, this person needs an IPP, this company needs, they need to start working today, or you're not going to have it done in time. We're already at June 1st, not enough time. So, here's the other reason. Did you know this year, 2026, and this has been projected for a couple years, because this actually came out in 2021, there is going to be $700 billion of assets from one generation moved over to the next. And as accountants, don't we want to prepare our clients for it? Because if it's not prepared properly, you're going to run into that one family I talked about earlier with the $633,000 tax liability. You as accountants, you should be saying to your high net worth clients, you know what? You got a lot of money. You need to sit down and make sure this is properly done. If it's not properly done, when your family comes to me, I'm going to tell you, you were warned. I don't want to be on the hook for all this money. You shouldn't be either. You know, it's interesting. I had a client come to me and say, you know what? I don't worry about my kids. My daughter's a dentist. My son's an engineer. They have more than enough money. If Revenue Canada goes to them, I'm not here. I said, okay. If you want all your money to go to Revenue Canada, write them a check today. You can write that off your taxes. Or why don't you do this? Figure out your favorite charity. We'll write a check to your charity. Can you get to write that off your taxes? You know what they did? They said, you're serious. There's a lot of money going to Revenue Canada. Yeah. Maybe we should have things properly set up. That's what we do here at HUD. That's what we do here at HUD. So, how do you proceed? Well, one, and this we get this a lot with accountants. You know what? I have my own business. I just want to refer people into you. We'll work with you. More importantly, if you want, we will have one dedicated, experienced advisor in your office whenever you need it. And we've had accountants come to us and say, "Can we have an advisor come into our office Mondays and Fridays and help our people out?" Of course we can. We're here to help you out. Number two, if you wish, you can get your license. I find a lot of accountants don't because they think it's a conflict of interest, but you can go get your license. We have no issues with that. We will support you and help you out. You can hire somebody now I'll keep you with your license for your office. Could be your spouse. We will teach and train them how to do this business properly so they're compliant to help you out. We'll help you out. Now, if you hire somebody who's just starting out, they need to be sponsored for minimum 2 years. We do have sponsoring companies that we will do that. Now, the other thing you can do is maybe you have a lot of business and you want to build your own agency network. Maybe you have 4 or 5 people in your office. We will help and support you there as well. We're here at High Point really to do a few things. One, to make sure you understand that you need to be compliant. Number two, we're here to help and support you being compliant. Number three, we really want to work with you to make sure you continue to grow your business. Because if you work with us, you grow your business, we grow our business, and everybody's happy. So, I promised you something different today. One of the things we do and we teach all of our people is what's happening in the market. So when you walk away today, if you said, you know what, High Point's not the place for us, but I want to know personally how I can do some stuff. We sit down with chief economists all the time, really, so we can help our clients. So I'm giving this information to you. So back at the start of the year, we sat down with the chief economist from Capital Life, Desjardins, RBC. And they all said the same thing. What's interesting, I met this week with Empire Life, and they had a different twist on it. And I'm going to share with you what they told us. So back then, they said there's a lot of things happening in the world right now. They're expecting oil prices to go up, which, as we all know, they did. Gas prices go up, inflation went up. The other thing they said is, okay, what we're very worried about, because back then it was all about Venezuela. What they were very worried about is, okay, what is the states going to do with Venezuela? So they said, you know what, we're very concerned. Get your money out of the US. Get your money out of the US. So where should you put your money? Well, they looked around the world. They said the number one place you should actually go is Canada, but in certain areas. Number one place you should be putting your money is in the Canadian banking system. Being you should buy the banks. Why? Last year, all the major banks used AI, reduce their operating expenses by 25%. More profits. Next thing they did is they're holding on to a lot of money right now. And they're saying they're going to start investing into when the economy turns and really start investing that money. That's what they told us. So what's interesting? The Empire Life chief economist this week, this is what he said. Very similar to that. All of that was true and accurate. And if you've been watching it, some markets have gone up, some markets have gone down, the banks have all gone up. He said there's going to be a major crash in the US. If your clients already haven't moved their money out of the US, because they think everything's going to be okay, get their money out today. There's going to be a major, major, major crash. Why? What's going on in Iran right now? We know inflation is skyrocketing. It's getting worse. The average American is not paying their bills. There's going to be a run on defaults. They're very, very, very concerned about U.S. market. Again, Canadian banking industry is doing pretty good. Now, one of the things they also talked about was back in January, they were very concerned about the Canadian insurance companies. That, when you're talking about insurance companies from the commercial side that deals with, home and auto, they're very concerned about wildfires and everything else. They said, you know what? There's a little concern, but not a lot. So if you have some clients that still are on the fence, they want to diversify some of the money, some of the big insurance companies like Intact and stuff, good companies to buy. I bring this to you because we talk on a regular basis with our agents. I'm giving you a snippet. We talk about a lot of different things. We're always talking education. We bring the education point out on a regular basis.